Okay, so another day's in the books for the stock market, and it was a green one, baby. Let's go. The S&P, Dow, Nasdaq, Russell, all up around 0.5% to 0.75% as the VIX went down almost 4%, and this is in the midst of earnings season. And you guys saw the title. We have 10 companies, 10 stocks to break down that just reported earnings. So we might as well dive into it. Let's not waste any time. If you find value, hit the like button, make sure to subscribe, and of course, take a sip of, well, whatever you're drinking. In this case, I have a Costa Rica Clementine by Wonder Water. It's like a tea. There's some caffeine in here, guys. You know I had to get my midday caffeine. Well, I guess now it's 5 p.m. It feels like midday still. Either way, cheers, guys. I appreciate you all for tuning in, and let's dive into it. So we had a green day across the board, like I said, and we're extending our push past these moving averages on SPY and on QQQ on the 4-hour time frame, which is perfect. Great news for the bulls. You guys see here we're extending our gains above these moving averages on SPY, and QQQ is looking pretty good as well. Now trading at about, I think, a 2 to 3, actually no, more like a 4-week high is where QQQ is trading, and now it's pretty much testing the highs from the 2nd of April, which you guys know what that day was. Quote unquote Liberation Day, right? 2nd of April. So pretty much QQQ has now recovered all the losses from the crash after quote unquote Liberation Day, right? And I think SPY's recovered all those losses as well. So in other words, we're going in the right direction. We're going in the right direction. So I don't want to spend too much time on these indexes because we have a long list of stocks to cover. So guys, buckle up. Let's just dive into it. So the first one I want to cover, and a lot of these, at least the ones that we're going to cover in the beginning of this video, they reported earnings after the bell. And then the latter half of the video, they reported in the morning. So let's just get into it. Visa reported just about an hour ago, and this stock, as you guys can see, is starting to break out of this trend line I drew, I believe, on the Sunday video. You guys can see we had this drawn out, and we were kind of making lower highs, right? Heading into earnings, and now we're starting to get out. We're starting to break out and bounce off these moving averages, heading in the right direction. So Visa reported adjusted earnings per share of $2.76 versus $2.68 expected on sales of $9.59 billion versus $9.55 billion expected. So double beat for Visa. And anything on guidance, it looks like they authorized the $30 billion repurchase program. So they're buying back stock, which is good for the existing shareholders, right? In other words, what that means is, okay, let's say there's 10 million shares out there of Visa stock. Let's say you already own the stock, and then management comes out and they're like, okay, we're going to buy back X amount of dollars of stock. So what does that do? Well, it takes out, let's say, instead of 10 million shares now, there's 9 million shares out there. So they're taking shares essentially out of the market, making your shares more valuable, right? In other words, so they're buying back stock, and this is something that a lot of big companies do, you name it. Apple does it. They're very known for it. A lot of the big tech names. So Visa's doing that, and the stock, again, is starting to pop. We're up a good couple dollars after the bell. At least we were. Now it looks like, well, actually, no, this red candle, we recovered after it. But we popped to 350. Now we're at about 345, but we are selling off a little bit from that 350 pop. But hey, man, we're going in the right direction. Visa looks pretty good on the charts. And if this thing takes out 351, which was the high from the end of March, early April, this could start flying, maybe further, maybe towards all-time highs. So Visa, you got to watch it. And we're not going to go too deep into all of these earnings. This video would be way too long. So it's going to be more of a surface level. Okay, let's see the EPS, revenue, maybe guidance. Look at the charts really quickly. So keep that in mind. We can't go too deep into these earnings, but pretty good initial reaction here from Visa and Starbucks. Let's see how this one's looking. Starbucks, which, by the way, guys, is down a lot from last time they reported. The stock, after the earnings report last go around, it hit $117 a couple weeks after earnings, and now we're at $85 per share. To give you all some perspective. So we are down about 25 to 30% from that high. So it looks like Starbucks reported adjusted earnings per share of 41 cents, which missed the 50 cents expected on sales of 8.76, which also missed the 8.86 billion expected. So double miss for Starbucks, not ideal. Let's see, anything on guidance, blah, blah, blah. Looks like CEO says optimism has turned into confidence. He said, I see more opportunity than I imagined. I really hope so, man. I hope he says that, or he's seeing that, even if he doesn't mean it. I hope he's saying that. In full disclosure, I don't own Starbucks, but if I was a shareholder, that's exactly what I want to hear my CEO saying. But looks like here, anything on guidance, looks like Q2 international same-store sales up 2%. Q2 North America same-store sales down 1%, so not looking great in North America. But, man, the stock's down so much, even though they double missed, the stock's not moving down, which is a good sign, because, again, it's already down 27%. A lot of this is probably already priced in. So that's a quick breakdown here on Starbucks. Not the best earnings. We don't have guidance yet, but we'll see how that goes. And Snapchat, oh man, what else is new? Snapchat is tanking. This company not always, but it seems like every time they report earnings, the stock goes down. I'm not surprised. We closed at $9, and now the stock's at $7.90. It got all the way down to $7.62, and that's actually after it popped to $9.89 after the earnings came out. So this thing has been a roller coaster ride, and I'm not surprised. I mean, we've covered Snapchat a lot over the years, and I've told you my opinion. I'm not a big fan of it at all. This company is just not. I doubt the stock will ever get back to where it was. I think it hit $80. This company is doomed eventually, in my humble opinion. It's only a matter of time. It's like a slow death we're witnessing. They just can't consistently stay profitable. Their content is just not valuable. The platform is a cesspool, in my opinion. We're not going to get into that rabbit hole in this video, but Snapchat, yeah, they lost 8 cents on the quarter. That beat the loss of 13 cents expected, and they beat on sales, 1.36 bill versus 1.35 bill. But man, you can tell the stock still doesn't want to go up after that. Clearly, just not good enough earnings, right? And daily active users were up 9%. Looks like there's 460 daily active users. I'm definitely not one of them, but it's just not a good investment. It could be a decent app. Let's say if you're, a teenager, you're young, blah, blah, blah. It could be a decent app, but it's just an awful investment. It's not even, that's, at this point, it's an objective fact that it's an awful investment, right? But that's Snapchat. PayPal is another one we got. I'm pretty sure they might have been this morning. So now we're going to get into the ones that were this morning. PayPal reported earnings per share. Let's see here, guys. Adjusted, by the way, $1.33 versus $1.16 expected on sales of 7.79 versus 7.85 billion. So they beat EPS, missed on revenue, and they affirmed their guidance, which probably is the only reason why the stock is holding up. It went up 2% on the day. So they affirmed their full year 25 guidance, which is good news. They didn't cut it or, raise it. They affirmed it. So pretty much, essentially, what they gave last time is still what they're guiding, which in this environment is good. You know what I mean? So not bad, but I'm not a big fan of PayPal in general. There's so much competition. The business is obviously well out of its growth phase, and there's just way too much competition for me to even mess with it. And the stock price, look at this, man. It's at the same level it was at almost a decade ago. So when a stock's at the same level it was at 8 years ago, there's a big problem. There's a big problem, and I want no parts of this turnaround story. But hey, the fact that they affirmed the guidance, reaffirmed it, not too bad. So that's PayPal. UPS is another one. UPS stock went down about 0.5% today. Not much. The company reported earnings this morning. UPS reported, EPS on an adjusted basis of $1.49 versus $1.38 expected. Sales 21.5 versus 21.05 billion. So double beat for UPS. And it looks like here UPS says they're going to reduce operational workforce by about 20,000 positions. Oh, my God. So a lot of layoffs are coming at UPS. They probably already started. I'm not too familiar there, but man, that's crazy. Q2 outlook will not be provided during Q1 conference call. Pretty smart there. There's macroeconomic uncertainty. So like we say on the channel, guys, no guidance is better than bad guidance. So the stock's pretty much unchanged, but I bet you if they gave guidance, especially if it was bad, obviously the stock would probably go a lot lower. So they're not giving guidance. Good for UPS. So Spotify, and by the way, UPS is still very much in a downtrend. Be careful with it. Spotify, on the flip side, is not in a downtrend, really. It's kind of just trading sideways. It was uptrending for a long time, and now we've kind of been flat throughout the, pretty much since this year started, right? And we kind of have an ascending triangle here. I'm not sure if you guys noticed that on the 4-hour chart. So Spotify reported earnings per share of $1.13 versus $2.21 expected. Wait a second. Why did they miss so badly there? That's pretty bad. Sales $4.41 billion versus $4.21 billion. So missed wildly on EPS, but a nice beat on revenue. Looks like here, where are we at? Looks like anything else worth mentioning, really? We don't have anything on guidance. Gross margin for Q1 was 31.6%. All right. Spotify, not seeing much else here. Ad-supported revenue up 8%. Not bad. Q2 total premium subscribers, 273 million. I wonder what that's up year over year. But, oh, yeah. 12%. There we go. Not bad for premium subscriber growth year over year. And again, the chart looks pretty good on Spotify, man. Pretty good if you ask me. And the stock is up a little bit, or actually no, it went down 3.5% on the day, but it recovered a lot of the loss, which is good news. It hit 540 this morning, and it closed at almost 580. Think about that. So a lot of the loss was recovered there. So I'll keep an eye on Spot moving forward. Cheers to that, by the way. And by the way, guys, make sure to hit the like button. Don't forget to subscribe. Follow along for more content. I really appreciate you all. Let me get a sip of this, what is this called again? A tea. It's like a caffeinated clementine drink. I saw it at the store, and I was like, all right, I'm going to try this out. All right. Cheers to that. Oh, man. So we have 4 more stocks. And by the way, join the free email stock newsletter. I'm not sure if you guys did that yet, but I send out my top stocks weekly. That is linked down below, and it's free. So Pfizer reported earnings this morning, and the stock went up 3.2%. Not a bad day for Pfizer. Looks like Pfizer reported earnings per share of 92 cents versus 67 cents expected on sales of 13.71 billion versus 13.95 billion. So they beat EPS, missed on sales. Looks like here they affirmed their guidance as well, adjusted EPS guidance, and they affirm their sales guidance. So it seems like the companies that are affirming guidance, right, they're saying, okay, our guidance is the same as it once was or as it previously was. Companies like that, their stocks are holding up. Pfizer held up nicely, 3.2% Green Day. What's the other one that affirmed guidance? Was it PayPal? Yeah, it was PayPal, I'm pretty sure, and that one went up a little bit. So notice a trend here. These companies that are affirming guidance, their stocks going up. And honestly, the companies that are not providing guidance, their stock's kind of holding steady, like UPS, although that one's down a lot recently. But either way, Pfizer, not too bad. They missed revenue, but all right, the fact that they're reaffirming guidance, that's holding up the stock here. And we're at a big spot on the chart. It's still downtrending by a long shot here. So we're going to have to see some momentum, probably past the mid-20s. And if we get that, maybe we start to break out fully here on Pfizer. But it's got a ways to go on these charts. So let's do a rapid fire for these last three guys. Coca-Cola, ticker symbol KO, they reported earnings this morning, and their stock went up 0.75%. Not bad, man, not bad. So they reported, earnings per share adjusted of 73 cents versus 72 cents expected on sales of 11.1 versus 11.14 billion. So they beat EPS, they missed on sales. All right. Not a big deal because clearly the stock's been holding up. So it's like, all right, they missed on sales. If I was an investor in Coca-Cola, I wouldn't really care about that because clearly it's still a defensive stock. People are still holding on to it, and they're not phased at all. I mean, the stock went up, for Pete's sake, 0.75% on a miss there on revenue. Let's see what their guidance is. Did they give us guidance? Maybe not. Looks like here they expect full year, 25 comparable EPS growth of 2 to 3% versus $2.88 in 2024. Comparable EPS guidance of $2.94 to $2.97 versus $2.96 expected for full year 25. So pretty much inline guidance there for full year 25. Not bad. So yeah, man. Pretty good, honestly, for Coca-Cola, and it's holding up steady, and we're at a multi-month resistance right now in the mid-low 70s here. Big spot on the charts. So two more here, guys. JetBlue, JBL used the ticker. It went up 2.7% on the day. I'm pretty sure they reported this morning. So JetBlue reported adjusted earnings per share. They lost 59 cents versus the loss of 61 cents expected. So they beat EPS and they missed on revenue, 2.14 versus $2.15 billion. So they beat EPS, missed on revenue slightly, not a big deal. Let's see. Looks like average fuel price in Q1 was $2.57 per gallon. Their system capacity decreased by 4.3% in 2025 in the first quarter. I don't know why. Quite frankly, I don't really care much about the airlines, so I'm not going to dig deeper into that. But yeah, I figured let me cover JetBlue. And man, at this point, it's pretty much a penny stock. Anything under $5 per share, I'm thinking is a penny stock. So JetBlue is back in that penny stock category. Pretty nuts. And again, I'm staying away from not only JetBlue, but airlines in general. Not a big fan. And RCL reported Royal Caribbean, and their stock is starting to break out in the right direction. You all can see here we were under the moving averages for a couple of months. We had a death cross, but now it's the opposite. We're breaking out of the moving averages. We have a golden cross, in the making here. So Royal Caribbean reported adjusted earnings per share of $2.71 versus $2.54 expected on sales of $4 billion flat versus $4.01 billion. So they beat EPS, slightly missed on sales, not a big deal. And they raised their full year 25 adjusted EPS guidance from $14.35 to $14.65, now to $14.55 to $15.55 versus the $14.94 expected. So very nice pop, or a bump rather, in their full year 25 EPS guidance. I'm liking that. And it looks like Royal Caribbean said, we're focused on what we can control while navigating current macroeconomic landscape. So I'm liking that guidance bump there on EPS for the full year, and the stock is as well. I mean, I think earlier in the day, the stock was up a lot more. I think we were up about 5% initially when these earnings came out. Then we got a sell-off at open, but then we rallied a bit into closing up 25 cents. Okay, so we'll see if this overall breakout on the 4-hour chart on RCL continues, and it looks like it might just do that. So what do you guys think? Let me know your thoughts in the comments. We covered 10 companies in this video, and now that I think about it, I don't own any of these stocks directly, at least. I own them through ETFs, and I'm pretty sure all you guys probably do as well if you own any kind of ETF. But directly, I don't own any of these stocks, but that could change at some point in the future. So do your own research. As always, I'm not a financial advisor. You got to do your own research, and you got to join that free stock newsletter and check out the Patreon. All of those are linked down below. And with that being said, guys, cheers. I'll catch you all in the next one. Have a great day.